Thank you for joining this morning's daily webinar where we discuss solo 401k aspects. We also go over your questions. Give me a moment here. Let me check the volume here. Make sure everything's working. Hopefully you can hear me here. Okay, so we're going to talk about the self-directed 401k eligibility requirements, how you can invest in alternative investments, whether we're talking about real estate, promissory notes, precious metals, cryptocurrency, and beyond. So in addition to investing in equities, you can also invest in alternative investments. As always, we're live at 10 a.m. Pacific time every day, Monday through Friday. We also have a second daily webinar at 1 p.m. Pacific time. So go ahead and subscribe to our YouTube channel as well. Visit our community, which is mysolo401k.net/my community, where we have a lot of videos there. We have a lot of individuals that post forums there, and of course a whole section of guest blog posts. So feel free to also post blogs on our My Community and have a link back to your business to get some of that good awareness out there. Okay, that being said, let's talk about the self-directed 401k. In order to open a self-directed 401k, you have to be eligible. So obviously, before you can begin investing in alternative investments, you first need to open a self-directed 401k. And thus, you need to meet the eligibility requirements, such as being self-employed and not employing any full-time W-2 employees in your business. A full-time W-2 employee is an individual that works 1,000 hours or more. So your spouse can also participate in the plan. He or she doesn't have to be an owner in the business, but he or she would have to work in the business in order to participate in the same solo 401k plan, because the solo 401k plan is sponsored by the self-employed business. So for example, here's a slide here where you would have two participants in the plan, let's say both spouses, because they're both working in the same self-employed business. Let's say it's an LLC, taxed as an S corporation, and they each get a W-2 through that self-employed business. So their contributions to the self-directed 401k plan would be based on their respective W-2 wages. This slide here demonstrates a two-participant plan. So both spouses, you can see here that a total of 6 holding accounts, that is, brokerage or bank accounts, are open under that self-directed 401k. And you need separate bank or brokerage accounts for each spouse, as well as different sources. So here you've got a pre-tax bucket, a Roth bucket, and a voluntary after-tax bucket. So each spouse has 3 brokerage accounts under the same plan. One plan sponsored by the LLC, 6 brokerage accounts. You don't have to contribute to all these separate buckets. You can, but the plan is already built to allow for it. So whether you do it now or later, it's still going to be available. Likewise, when you go to make self-directed 401k investments, let's say you want to invest in real estate, you can pool both spouses' funds in the plan because it's just one plan in the same real estate investment. Let's say you want to buy a rental property and it's going to be an all-cash purchase, and both spouses have funds in the plan. And let's say you've done the mega backdoor and you converted those funds to the Roth solo 401k. Both of you did a mega backdoor. So now you go ahead and invest the Roth solo 401k plans in that same solo 401k plan in that same rental property as an all cash purchase, which means that all the rental income will flow back into the respective Roth 401k brokerage accounts, and they're going to grow tax-free because you will have made that investment through your Roth solo 401k. Okay, let's take a look at a question here, and then we'll circle back here and talk about the eligibility checklist here. It's a good list for those who are looking to open a self-directed solo 401k for the first time. It's a good list to be aware of. Okay, so we've got a question here from Mitish. I'm self-employed S-Corp with just myself and my wife on the W-2. Last year, we contributed 25% of W-2 to the solo 401k. Can we save FICA on the contribution, for example, if we open a cafeteria plan? That's a good question about cafeteria plans. Unfortunately, we're not well-versed with cafeteria plans. We are well-versed with IRAs and solo 401k plans. So from a solo 401k contribution perspective, contributing to the solo 401k plan is separate from contributing to a cafeteria plan. So I would talk to the cafeteria plan provider if you're looking to open one up. But yes, since your business is an S-Corp, both of you can participate in the same solo 401k plan and make contributions to the solo 401k plan based on your respective W-2 wages. So if we're talking about the employer contribution, that 25% would be used to calculate each of your respective contributions into the plan. So for example, if you pay yourself $100,000 of W-2 wages, you can contribute 25% of $100,000, which would be $25,000. Now, what's good about the contributing to a solo 401k when the self-employed business is an S corporation or a corporation for that matter, is that since contributions are based on W-2 wages, you don't have to subtract 1/2 of Social Security taxes or Medicare taxes from the calculation before performing that solo 401k contribution calculation. So again, take a look at that. But as far as the cafeteria plan, that falls outside our expertise. We can talk solo 401k plans and IRAs all day long. I'm going to share a link as well that talks about the corporation contribution rules, so you can take a look at that. I just sent that over. So take a look at that as well, and then we'll continue in answering some more questions here. And then, or actually, we're going to continue here going over the self-directed solo 401k, and then we're going to go ahead and answer some more questions. Let's see here. Now, one last thing I want to explain to you is that from a contribution perspective, the employer contribution, which is deducted on the 1120S corporate tax return, that employer profit sharing contribution is exempt from FICA tax because it's the corporation, not you, that's making the contribution on your behalf. There's actually a good chart on the IRS website that talks about that. Let me see if I can dig it up here. Yeah, here we go. Let me send that over to you. I'm going to send that link over and share it with you. Okay, there's that link there. Okay, let's continue here with the presentation, and we'll circle back to that. So from an eligibility perspective, you need to, as I mentioned, you have to be self-employed. You cannot employ any full-time W-2 employees who work 1,000 hours or more in your business. Any entity type can really establish a solo 401k, meaning it doesn't have to be an LLC or an S corporation. Therefore, it can be a sole proprietorship. Oftentimes, if you're a contractor, you're going to receive a 1099 NEC, and then you're going to file a Schedule C, which makes you a contractor, so that would qualify. You do need to be reporting self-employment activity. That's why it's called a solo 401k plan, because it's for those who are self-employed, and you have to be doing material services and reporting that net profit or loss. And yes, your spouse can also participate in the plan, as I discussed earlier. You can also participate in your daytime employer 401k plan and also continue to participate in your solo 401k plan. So you might have a side business. You can make contributions to the solo 401k plan based on your side hustle, self-employment income. And then you have a day job, let's say over at Walmart or Home Depot. You can participate in the Home Depot or Walmart 401k and make contributions to that plan based on your W-2 wages from that employer. And many clients will utilize the solo 401k in conjunction with their daytime employer 401k, whereby they'll make the mega backdoor Roth solo 401k contribution to the solo 401k of $70,000, which is the overall contribution limit for 2025. And then they'll immediately convert it to the Roth solo 401k plan, and they can make that voluntary after-tax solo 401k contribution irrespective if they've maxed out their daytime job 401k. So you can do some really good planning items with the solo 401k. The solo 401k does require its own employer identification number, which we'll obtain as part of the setup process. That EIN number will be used for Form 1099-R reporting for the mega backdoor Roth solo 401k, for example, as well as distributions. Okay, let's take a look at some more information here. Let's take a look at the, so we looked at the 2-participant plan earlier. Let's look at a 1-participant plan here. So a 1-participant plan is one where obviously only one person is in the plan. So this would be a business where only, for example, one spouse is in the plan. The other spouse is not working for the business, or it might just be someone who's not married, but they're an owner and an employee in the business. So he or she would have 3 separate accounts under the solo 401k plan to hold his or her respective Roth, pre-tax, and after-tax funds. Okay, so here's an example of some allowed investments under a self-directed 401k. Let's take a look at the slide here. Let's make it a little bigger here. So you can invest your self-directed solo 401k, aka self-directed 401k, in real estate, whether it's residential, commercial, land, foreclosures, rehabs, as well as promissory notes. So mortgage deeds of trust. It can be unsecured or secured promissory notes. Most clients will look to invest in secured promissory notes, where the note is secured by a property. They generally want to take first position on that title, on that deed, in case there's a loan default. The solo 401k can then reconvey that property. You can also invest in various other types of investments like metals, precious metals. From a precious metals perspective, it's got to be a certain type of metals. It's got to be a certain quality. Generally, it's got to be a 99.99% finesse quality. So let's see if I can pull up some good information on metals here and just give a few items here. So let me see if I can share my screen on that front. So let's share my screen here. Okay, so here's a good page here from our website that talks about investing in precious metals. So that's a type of alternative investment. We have a good infographic and video specific to investing in precious metals. Take a look at that. But it talks about how to make that purchase, the types of metals allowed versus disallowed. So take a look at that. Let's see here. We also have a list here of disallowed versus not allowed metals. So here's a list here, or let me go back here and pull that list up here. Here we go. Here's a good list here. So you can invest in American Eagle coins, Australian kangaroo nugget coins, Again, it's got to be at 0.995 and plus finesse quality. You can also invest in silver, platinum, palladium. Here are some disallowed types of precious metals. So the Austrian 100, the 20, the 10 Corona, the Belgian 20 franc. So here's a good list here. So as you can see, we have a lot of good resources on our website regarding investing in alternative investments. So that was just an example there of one type of alternative investment. Now let's take a look at, we were talking about alternative investments. So again, it can be physical real estate, precious metals, notes. Let me share a slide from or a page from our website about investing in real estate, which is another good one. Let's see here. Okay, let me share my screen on that one here. So here's a good presentation here that we did on investing in real estate. We have a separate video for that as well. We've got here a step-by-step procedure. Some of the items to keep in mind when investing in real estate with the self-directed 401k is that the offer needs to be made in the name of the self-directed solo 401k plan. The funds have to flow from the solo 401k plan directly to the title or escrow company, for instance. Title to the property has to be in the name of the self-directed 401k. For example, if the name of the self-directed solo 401k is ABC Trust, and the trustee's name is Jane Doe, it would be titled Jane Doe, comma, trustee of ABC Trust. And then going forward, you're going to want to pay all expenses in connection with that rental property that's owned by the plan with funds from the solo 401k plan. So a leaky roof, property taxes, paying contractors who are fixing the property. And then, of course, all the rental income flows back to the solo 401k plan. Same thing at the time that the property is sold. The proceeds will flow back to the solo 401k plan. All right. So that's a good example there of various types of solo 401k investments that you can make with the solo 401k plan. A solo 401k plan is also great for making contributions. You can make large contributions, for instance, $70,000 for 2025. For 2025, the contribution maximum is for 2024, the maximum contribution is $69,000 for those who are under age 50. If you're age 50 or older, you can contribute an additional catch-up amount of $7,500. For 2025, the contribution limit went up to $70,000. You can also do a catch-up contribution of $7,500 for those age 50 or older. There's also the super catch-up contribution that applies for 2025 tax year for those who are age 60, 61, 62, or 63 in 2025, where instead of contributing $7,500, you can choose to contribute $11,250 instead. It's known as the super catch-up. You can also borrow from the solo 401k plan. Now, from a self-directed 401k perspective, when investing in real estate, which is a type of alternative investments with your solo 401k, the solo 401k can obtain a non-recourse loan, which means that the bank performs a loan to the solo 401k, or it can be a hard money lender. So the loan is to the solo 401k plan. That loan is then used to invest in a property. So the borrowed funds in conjunction with funds in the plan are used to invest in that particular rental property. And then the payments on the non-recourse loan come from the solo 401k plan. And then when the property is sold, all the proceeds go back to the solo 401k plan and you pay off the remaining balance on that non-recourse loan. And then you can reinvest the funds again. Now, there's no unrelated debt finance income tax that invests when investing in a solo 401k in real estate where you use a non-recourse loan. So that's a big plus for those who like to invest their self-directed 401k and alternative investments like real estate, and that you can utilize debt financing without incurring an additional tax called unrelated debt finance income tax that applies to IRAs, but not solo 401k plans when it utilizes a non-recourse loan for investing in real estate. Okay, so the solo 401k also comes with the auto contribution credit, which is $1,500. So anyone that opens a self-directed solo 401k, aka self-directed 401k here in 2025, the plan will be drafted with the auto contribution credit, where you're going to be able to deduct $500 a year for 3 consecutive years on your business tax return for having a self-directed solo 401k. Essentially, the government is subsidizing self-employed individuals' solo 401k plan to help them save for retirement. So take a look at this slide here. Again, it's $500 per year. It can also be added to existing solo 401k plans, and it would be effective for 2025, 2026, and 2027, and $500 increments for those 3 years. Not all solo 401k plan providers has a plan that allows for the auto contribution credit along with specific documents that have to be signed, such as, for example, traditional plans offered by Fidelity or Schwab don't come with that type of auto contribution credit. You don't have to contribute in order to take advantage of the auto contribution credit, so you can opt out of contributing, but you can still contribute if you decide to, up to the overall limit. You're going to use Form 8881 to claim that credit. So you would file that form each year with your business taxes to get that credit. Sole proprietorships also qualify because, again, the self-employed business can be an LLC, S-corp, or sole proprietorship. So you still qualify for this auto contribution credit as well if your self-employed business is a sole proprietorship. And you can learn more about that auto contribution credit under code section 45T like Tom. Okay, so that goes over what we wanted to go over today. We're going to be back again here at 1 p.m. Pacific time. So until then, have a good morning, and we'll see you a little bit later.